Good morning, good morning, ciao. How's everyone? This is another Trader Bite. It's 8:02 a.m. Chicago time, 9:02 a.m. Eastern time on Thursday, the 30th March 2017. Thanks for joining me for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market sentiment, the market position so far is again mixed, just like it was yesterday. The leader is crude oil this morning. Crude oil pushing up right against the $50 mark on the May contract, 49.98 at the high, and currently trading 49.88, up 37 cents or 0.75%. Crude has been on an uptrend. Of course, that's been driven by um, more and more discussion of extending curbs from OPEC for the next 6 months, just basically pushing inventories down, supply down, and therefore raising prices. The loser today is again gold by about 0.5% down 1,000. It's trading at $1,250.20, down $6.60. The only index that's up this morning, which is right at one tick, is the DAX. Everything else is red. What's green today is the US dollar, the euro bund, and that's about it. Okay, so that's where we stand as far as news, overnight news. Not much going on. The shares of Amazon rallied 2.1% yesterday, giving Jeff Bezos a net worth of $75.6 billion dollars, making him the second richest man in the world. Amazing. Also, J.P. Morgan is looking into office space in the EU and looking to move its operations out of London as a result of Brexit. And Legg Mason is cutting staff. As far as the news releases this morning, at 7:30 this morning, the U.S. released initial claims, 258,000 versus 247,000, slightly worse. Continuing claims, 2.05 versus 2.03, also slightly worse. We're on fiber running 100 megabits per second this morning. There's no buffering on my end. Just reduce your resolution if you find that your feed is buffering. It's happening between you and YouTube. Um, Also at 7:30, we got Q4 final GDP annualized 2.1% versus 2%. That's better. And also personal consumption um, came in strong at 3.5 versus 3%. Final GDP 2.1 versus 2. And core PCE Q on Q is 1.3 and 1.2 expected. Again, the oil stuff, there was a Kuwaiti oil minister who came out and said Kuwait and other countries support extending the OPEC and non-OPEC production cuts. That is driving that market higher. Also, the Germans reported their March CPI at 0.2 versus 0.4%. Disappointing release there. As far as what we're expecting today going forward, uh, we're looking for no economic releases going forward. I mean, we're going to get natural gas inventories at 10:30, expecting negative 40. But there is a lot on deck as far as speakers. This morning, we already had ECB's Mersch, ECB's Lycanen, ECB's Nawatny speaking before this moment. And at 8:45 Central, 9:45 Eastern, we get Fed Speaker Mester. At 11, we get Kaplan. At 11:15, we get Fed Speaker Williams. And at 4:30, we get Fed Speaker Dudley. So there's a parade of speakers out there. I don't know that these guys are having an effect on the market. I think the market's already knows what to expect, and it's really not affecting the trade. So I wouldn't pay too much attention to those unless, of course, they surprise us. Um, Let's switch gears here and look. Oh, one thing I wanted to point out, really important. Um, Tomorrow is the last day of March. it's the month end, but it's also quarter end, the first quarter end. So just a word of warning, just from experience, quarter ends, um, semi-annual ends, like the end of June specifically, but quarter ends tend to see some fireworks, some volatility, and potentially some volume on the close. Quarter ends give us moves that you do not want to fade. Fading in trading means going against the most recent trend. So I just want to warn you that tomorrow afternoon, you don't want to get stubborn in a position and go against the market on the closing range, and that may start as early as 3:15 Eastern on month end or quarter end. So just pay attention to that. Treat it almost like an economic figure. Okay, I don't know what's going to happen. I don't know what's going to be shuffled, who's doing what window dressing, and so on. But in general, the moves there are OTF based and they run. Yesterday, the primary expectation is for the market to open in an open auction and go sideways early on, and then the expectation was for it to drop down after the open auction. The extent of the drop is likely to be the 2343 area was key. This low volume node that I put a box around yesterday, and then I'm expecting it to rally back up to 2357 and then hold at this price. Okay, and that's pretty much exactly what happened. Hypo 1 was on point yesterday. It was a day trader's trade. A lot of rotations, didn't really accomplish much. It was an inside day. The secondary hypothesis also expected to be an inside day, but what we're looking for on a secondary hypothesis is a quiet open, breaking the swing high, pushing to 57 for a failed test to the high, and then dropping to the lower distribution left behind on Tuesday to break the low volume node and hold at the lower distribution. This did not happen, but that was the second key play. Here's what actually happened. Okay, a couple of really important things that should pop out at you as soon as you see this. Let's reduce this to just the profile. So you notice here, actually, let me get rid of this. Hang on. Get rid of the developing point of control. We don't need that. It's confusing. All right, so boom. So the first thing you should notice is, yes, we did get a tight opening swing, which widened. So I widened the opening swing. It tested below. You should notice, I would expect you to notice if you're a prop trader following what I'm doing, I would expect you to notice that after it broke the opening swing low, it had an impulsive move up. This is a failed auction lower, and you stay off of shorts at this point. I would also want you to notice that the point of control, the key thing to notice is the point of control for yesterday was 57 and a quarter. The prior day, 57. Notice that this actually absolutely presented balance. The market is accepting this price up here and is building upon it. Currently, the ES is trading at 23.55. The ES low on the session is 23.53 and a quarter. And so the market's in a holding pattern here. And when we're in a holding pattern and we have the point of control sitting right on top of or around the prior point of control, what you have is compression, a buildup of energy, and so on. And that is likely to drive us. That's the energy that's likely to drive us away from here. Remember, the markets move from balance to imbalance to balance to imbalance. Man, I feel sorry for you guys who've been listening to me for the last 8 years or 9 years or so that I've been on. I've come out in public and I'm sharing what I'm doing here. Same plan as 8 or 9 years ago. Works through crashes, quiet markets, fast markets, same stuff again and again and again. You've been hearing the same stuff again and again, and I apologize for that. But That's what we have here. We have a market that's consolidating on top of itself. We took back the sell-off that occurred on Tuesday's close. It failed against that 2360 key MC point of control, right? MC volume point of control up here. It held multiple tests and then it just slipped out. So the buyers just could not hold on anymore. The weak hands started selling on the close to balance their inventory, right? Margin calls and that. And then what the market did is it took that and swept it right back up and brought it right back to where it was when this occurred. So this morning, the expectation is the market's likely to consolidate early, but don't be surprised if we get a quick move out of here later in the session. Let's take a look at the overnight session. The overnight session, if you look at just the overnight sessions, here, let's filter out everything but the overnight sessions. There's a pattern here. The overnight session tests up early and ends up down. Tests up early and ends up down. And then this one just ended up down, tests up early, ends up down, tests up early, ends up down, tests up early, ends up down. You see that pattern there? And this normally helps indicate to me that there's potentially some resistance initially, and then we're looking for the continuation move down on the open. However, if I bring back the 24-hour session so that we're seeing the day and the night session. Again, the night session is a dark blue profile, this dark blue box. The day session is the lighter profile. And then we do the same thing and look at this pattern. Oops, that's too much. And look at this pattern where we test early, come down. It ends up shooting up on the open. Tests early, comes down, shoots up on the open of the cash session. Tests early, comes down, shoots up on the opening of the session, tests early, pushes down, shoots up on in the early part of the session once consolidated. Do you see that pattern there? It's important to recognize, and that's why we review every day as a continuation of the last auction. Every auction is a continuation of the last auction, and it is like reading a book. It would be very hard for you to figure out if you open a novel or whatever, fiction, nonfiction, it doesn't matter. If you open it to the middle of the book and start reading from there, it'll be very hard for you to understand. You can get the gist of what the story is and how it's unfolding by the time you finish the book and get to the present, but it'd be very hard for you to figure out really and have a very solid grasp on what the market is doing without actually scrolling back a little bit. Of course, the market's infinitely going backwards. You can't go that far back, but as far back as you need to see how the auction works. So coming in and just kind of putting your butt in a seat and just going, well, we'll see what happens today, and just pick it up from there. Sure, you can do that. I did that for about 4 years when I started trading, scalping. I just sit down, no homework, just smack away on the order flow. No charts, nothing. But that made me the weak hand in the market. And as long as you don't see and look at what the auction has done and what the story is that's unfolding in front of us, like this sell and then buy pattern, you're not prepared for it when it actually happens in the trading session. So that's really my point here. I'm not going to dwell on it. But what we have here is a market that, again, pushed early, consolidated, dropped, and then what we have is a clear resistance area here, like I've talked about for the last few sessions, but we basically have melted through those during RTH, during the pit open here, the Wall Street open. Anyway, this is getting long-winded, but just pay attention to that. In the normal circumstances, I would see this as a weak low. I would see energy down below. I would expect the overnight low to go, and then I would be looking at the prior day for areas of support or targets below. However, in this situation, I'm aware that that's how the auction normally unfolds. We don't forget the fundamentals of the auction, no matter what the market's currently doing. But I'm also aware that I cannot lean. So I'll still look for the continuation trade lower, impulse, pullback, continue. But I'm I'm also not, you know, I'm not holding that or pushing that trade at all, recognizing that market participants have been buying on the open recently. Okay, so the pattern continues. You know, the laws of physics, laws of motion, Newton's laws of motion. We expect continuation in the direction we're in, and then the market has to show us that it's not willing to do that. My hypotheses for today, therefore, are open auction again. Same, we have the same trade, same pattern as the prior day. So if you cut out this this day from here, you basically have the same process as we did yesterday. So this morning, open auction, test down, which plays into the overnight low. Look for failure to continue lower, and then look for a test of your point of control, look for consolidation, and I'm expecting this weak high, this almost double top that we left behind here over the last couple of days. It's off by 3 ticks. I expect that to be broken at some point today or tomorrow. That's my primary hypothesis. Okay? The secondary hypothesis is, you guessed it, same old boring, same old thing. Open auction, test that point of control early, come up, test the value high, fail, test lower, come all the way down, and then finish somewhere in the middle again for another consolidation day, preparing us for an even bigger move on the month end tomorrow. There's hypo 3 and 4, but I'll let you come up with those and follow them since you've been watching these things for forever. I'll let you go. I've been going long with these videos over this past week, so I'll cut it here. Good luck. I hope you're gaining something from this. If this is all confusing, just go to my website, futurestrader71.com, and go to the video archive, and there are tons of free videos in there. Also on Futures.io, search for my name, and you'll see all these videos that explain that. There's also the webinar series that I built for charity a long time ago. They're also there that condense the information. Good luck, and I'll talk to you soon. Take care. Oh, one more thing. There was a mystery about the Delta yesterday. Sorry about that. There's a mystery about the Delta yesterday. It turns out it was an issue with how the data is being computed, compressed, and now the delta looks right. It doesn't change my view on how we're moving. I expect it to go higher still, but that was very confusing. I saw a huge divergence, which looked like a massive opportunity, which turned out to be a false alarm. Sorry about that. The delta shown on the screen now is correct. Thank you.